Hello there, it's Francis here. Basically, this is hopefully going to be a very informative and insightful video. I'm going to be, going through a number of things, notably, showing you the way I trade using the Ichimoku Kinko Hyo. I'm going to be showing you some trades I'm currently in. There was a live trade I took yesterday on video for those who are part of my trading community, and even as you can see the screen here, that is the trade on Euro USD. We're currently we're currently 31 pips up on that trade, and I expect it to go down even further. Now I would say it will be good for you to actually take notes, because obviously you won't be able to remember a lot of things that I say unless you take notes that you can actually refer to. This is the trade. I'm going to be explaining a bit about Ichimoku, or talking about Ichimoku trading system, in a minute. But basically, this is where we were. Let me just, apply the period separators. Okay, so this is today. That's today. That's today. So basically, this is where we were yesterday. Let me take it off now as well. This is basically where we entered the trade yesterday. It's approximately about 24 hours now. Let me see. We entered the trade run about here, I think. Yeah, okay, it's about 26 hours now, since we entered the trade. Even as you can see here, when we entered the trade, we went short, but the price went up, first before retracing. Now, note that I have placed my stop loss there. I do use stop loss. I can't do without stop losses. I won't expose myself or my account like that. So we entered the sell, and basically the price went up. It pulled back, before coming this way. I mean, like every trader, I would say, to get comfortable with pullbacks, once you've done your analysis and you are okay with your analysis, be prepared to take any pullback as long as your stop loss is in place. I always advise not to move your stop loss unless you really have to, unless perhaps you've done some further analysis and you realize it is best you move it. Anyway, even as I did explain yesterday in the video, I mean, not everybody would have seen the first video, so I'll quickly just go through it. There are 4 criteria I take, or I make use of when entering a trade. And this trade yesterday basically matched, supplied or delivered me all those criteria, met those criteria, I would say. The first criteria would be that the price, or the candlestick in this case, breaks out of the Kumo. Now, this is the Kumo. This green is otherwise called the cloud. This is part of the Kumo. This is reddish here, or maroon, which obviously indicates that it's going to be bearish. The market is going to be, the sentiment is bearish in the future. Here, where we entered the trade, it was green. You can see the cloud, or the Kumo was green, so it was bullish, and before then it was bearish. So criteria number 1, the price has to cross the Kumo, either to the downside or to the upside. If it crosses to the upside, you are buying. If it crosses to the downside, you are selling. So that's criteria number 1. Criteria number 2, there has to be a TK cross. Even as you can see here, a TK cross, that's the red line here, Tinkinson, crossing the blue line, which is the Kijinsen. The red line, otherwise known as the conversion line, and the blue line, the baseline. You know what? Let me go to trading view, because some of you might not see this clearly. Just in case you cannot see this clearly, but I'll be going to trading view anyway in a minute, but let me quickly just go through this. So criteria number 1, the price has to cross, break out of the Kumo. Criteria number 2, there has to be a TK cross. Criteria number 3, the future Kumo, or the Kumo future, has to be heading in the same direction. In this case, it's bearish. As you can see, it is red. So the future is going to be, if it's bearish, then obviously that's another confirmation. So that's confirmation number 3. My final and most important confirmation is the Chiku span breakout of the Kumo. The Chiku span breakout of the Kumo. So that's the 4th and most important confirmation to me. Some people do value the TK cross. They count it as important. Yes, it's important, but in this case, it would have been a weak signal anyway. What is regarded as a strong signal is when it breaks out at the bottom. If you are selling, and the TK cross happens here, that would be obviously a strong signal. As a matter of fact, you can see the the Tinkin-sen crossed the Kijun-sen to the downside. It went back up and it's gone down and it's crossed it again, which obviously means you are safe to enter another trade. As a matter of fact, I'll be doing that later on. Maybe not in the video, but I'll be doing that. So as not to take time, I won't do that now. So that is the criteria. Now, just some of the things I did not quite explain yesterday. I'm sure I didn't explain it. The Chiku span, which is this green wiggly line, the Chiku span mirrors the price. It mirrors the current price. So wherever whenever you have the price, or whatever time you have, I'll say that differently. At any point in time, I suppose that's the best way to say it. At any point in time, the Chiku span is always 26 periods behind the price. At any point in time, the Chiku span is always 26 periods lagging behind the price. So where we are now, if you were to put your cursor there and your crosshair and measure it to the back, backwards, you will see, the numbers there. I'm not sure if you can see it, but you see the numbers there shows 26. This particular chart is the 1 hour chart. So basically this would mean 26 periods, to the behind is where you would find the Chiku span. So if you were here, for instance, and you were to drag it back, you will see this is 26 periods behind. If you were to go here, for instance, let's do this. Let's just go here, for instance, and measure it. 26 periods behind is where you would have the Chiku span. So this candle matches this bit of the Chiku span, 26 periods, behind. So basically, when the Chiku span breaks out of the cloud, that confirms that the momentum is good, the momentum is strong. Anyway, not to spend too much time on that, let me just go back to, for those of you who've seen this yesterday, you could basically, pause the video and fast forward so you can get into the meat of today's talk. Now, let me just go to Trading View, showing you the same chart. Perhaps you can actually, see that better. Okay, so that's the same chart on Trading View with the white background, obviously. And I've chosen the gold color, for my Chiku span in this case, just so that each color stands out. So you can see where we entered the trade yesterday, round about here, and the Chiku span was somewhere around here. Then it had just broken out of the Kumo. We entered the sell, it went and then it came back down. Now the confidence I had in entering the trade or staying in the trade, even though it was going back up, it basically went about, let me see, it basically went about, let's see here now, it basically went about 45 pips, yesterday. Well, it had a pullback of about 45 pips, but I stayed in because the Kumo, as you can see here, is red, which indicates that the future of the market sentiment for the future was basically bearish. And I would say it is still bearish. Now, even as I was saying a while ago, you can see here that there is now a TK cross, another TK cross happening. So it's basically, another signal to enter the trade because every other criteria is met. As a matter of fact, perhaps this is even, well, okay, maybe not, but at least this is, equally a very strong signal to enter the trade. Okay, let's just now go back to my MT4 chart. By the way, this is just to say that, in a particular video, stay till the end. I'm going to be offering you some free indicators. I'm going to be giving you some free indicators, which obviously you can use for trading the Ichimoku trading system. Very effective indicators. Even as you can see here, you can see an arrow pointing down. You can see another arrow. This arrow basically, alerts me when there is a Kumo break, when there's a price breakout. So when this price broke out, this would be painted on the chart, as well as, I will receive an email, if I'm out and about for some reason, I'll receive an email on my phone, basically to alert me that, the Kumo has just broken through. Now, obviously, you would always, most of the time you would have enough time to go to your chart or to go take a trade, so you can see it broke out here. I was alerted. The price went up into the Kumo. When it broke out again, I was also alerted. Now, that is basically, one of the indicators I'm going to be giving away. Well, I'm going to be giving away on this video. That one is not going to be free. An indicator is not going to be free. What is going to be free is going to be very helpful and beneficial as well. I'm going to be giving away an indicator, which basically alerts you when the Tenkin-sen crosses the Kijun-sen. If it crosses it to the downside, you can obviously enter a sell. If it crosses it to the upside, you can enter a buy. I use that on its own without the other criteria. I use that on its own, for scalping. Usually, depending on the pair, perhaps the pound pairs and the JPY pairs, when there's a TK cross, I will usually go for about 10. I know it will give me at least 10 to 15 pips. So what I do is I will enter some trades, multiple trades as a matter of fact, that will deliver me 10 to 15 pips. So if I'm entering and going for 15 pips and I have 4 trades open, that would deliver about 60 pips. Obviously with a decent lot size, that is me laughing all the way to the bank. Anyway, let me go to, this is basically the trade we got in yesterday. You can see it's currently doing well and it's going to do even better. Now, let me show you some of the trades that you could have entered even today if you had some of these signals. If you had some of these indicators. Like I say, there's the TK indicator and there's the Kumo price break indicator, which is the Kumo price break, the indicator which alerts you when the price breaks the Kumo. Okay, let me go to let me come here, for instance. Now this is this is USD JPY. If you had the Kumo price break indicator, obviously you had, even when there was a break to the upside today, even if you had, it means you would have secured 55 pips. You will be 55 pips off by now, up 55 pips. Now, guess what? The price went up, but it retraced. It retraced by about 35 pips or so. You know what? that is really no issue when all the criteria is in place. When the 4 criteria I've just given you earlier on are in place, you do not fear a pullback. Even as you can see here, the Kumo future is green. The Kumo future is green, so you have no fear. This is the 1 hour time frame. As a matter of fact, on the 4 hour time frame, the Kumo future is red, which means bearish. To the daily, you will see that the Kumo future is bullish. So basically, if you are going to be swing trading, or if you're going to, if you intend to be in the trade for quite some time, then obviously you're not going to be looking to get in and get out of the trade and stay in for some time, perhaps some days. That's why if you go to the daily time frame, you would see that it's bullish, which basically means it's going to keep on going up. The Ichimoku system, I would say, is by far one of the best trading systems that I know of. Now, some people see it as an indicator, but I see it as a system because it has multiple indicators within it. Almost every indicator can be traded on its own. If you were with the Chiku span, you could do that. If you're going to trade with the Kinjin, basically whenever the price is on above the cloud, you remain bullish, and when it's below, you remain bearish. You could also do that. It's a powerful system. Now, what I intend to now show you is the trade I have been in for some time. Those in my trading community have been following along with me on that trade. Is the trade which is currently over 1,000 pips. I believe you can see that. Let's do this. We are currently over 1,000 pips on that trade. Now let's just do this. Even as you can see, well, you can see this anyway. There are other trades I'm in. This is one of them. That's gold. Okay, there's nothing there. There is the pound JPY, which is powerful move as well to the downside. But let's focus on this one, which is basically what I've promised those in my trading community, that I was going to show them how I got 1,000 pips. Now you can see basically from here, this is where we entered the trade, and we are currently now here over 1,000 pips. But obviously I didn't enter this trade. This is a daily time frame. Obviously I didn't enter this trade on the daily time frame. I entered this trade on the hourly time frame, about a month ago. So let me just see if I can mark this bit where I entered the trade. Let's see. It was run about October. Let me see. It was towards the end of October. Okay, I can't remember the exact date now, and I couldn't be bothered, checking my history, to find out when I entered. But it was run about here that I entered the trade, run about here. So let's now go back to the 1 hour time frame. Let's now go to the 1 hour time frame. Just bear with me. Let me basically share some of my trading psychology and techniques, even for trading the Ichimoku and trading generally. Okay, yeah, so we entered the trade run about there. You know what? I'm going to take off all these arrows so it doesn't look too distracting. Let me just take those ones off. Actually, okay, let me take that off. I've got two indicators there. Okay, I've taken them off now. So basically, I entered the trade. In addition, I'll tell you what else I'll do. Because for some of you who are new to using the Ichimoku, you might find that a bit too much. I'm just going to be, hiding the thinking sin and the Kinjin sin. So we are left with just, the Chiku span, and the price. Obviously, gives us a better way to work, because like I said earlier on, what is all important to me is the Chiku span cross. Once the price has crossed or broken through the cloud, I now wait for the Chiku span to also cross. So assuming the break occurred somewhere here, assuming the break, okay, that's not okay, towards the end here. So assuming the break of the candle occurred somewhere here, I can't remember the exact place where we entered now, but assuming the break of the candle occurred here, I would have waited for the Chiku span to also break the Kumo. I would have waited for the Chiku span to also break the Kumo. So that would have been 26 periods back, like I said a while ago. That would have been somewhere around here. So you can see the Chiku span is actually behind this red candle. So I believe it was probably around here that I entered the trade. So let's assume it entered the trade somewhere here. 26 period ahead, we would have been here. So the price broke out of the Kumo. There's no way, if this was when the price broke, there's no way I would have entered here, because when there's a huge move like this, there's almost bound to be a pullback. I would usually enter, if anything, at the 50% point, halfway through. Let's assume I entered here. The price, the Kumo, the Chiku span, sorry, the Chiku span would have been here. And what happened? It obviously then went up. It obviously then went up and then started to come down. Depending on what I saw then, I can't remember in details, but obviously I know what I tend to look out for. I would have seen that all my 4 criteria were met. I would have seen that the Kumo future was or the Kumo future was bearish. This is the 1 hour time frame. I would usually have done some multi-time frame analysis, which means I would have looked at a higher time frame. Even though I was entering on the 1 hour candle, I would have looked at the 4 hour candle, the 4 hour chart, as well as the daily chart. And once I was sure that it was going to be, it was bearish, I would have been confident. So basically, I would have had to wait, for the price to go up, to get that pull, to get the pullback, and then it began to come down. Guess what? Once it started coming down, there was no looking back. This was the major pullback that we had at the beginning. But once in the trade, it basically just began. As you can see here, the price remained under the cloud for quite a long time. It just kept on going. Yes, there were times when it pulled, it sort of like pulled back by even the 100 pips. It just kept on going down. There were pullbacks. It kept on going down. Guess what? I stayed in the trade. I stayed in the trade because each time I was looking at the Kumo future, and as long as it was bearish, I was going to stay in there. I was going to in there. And as you can see here, right all the way from here, it was bearish. Guess what? It kept on being bearish. It kept on being bearish. Now ask, at what point would you have come out of the trade? To be honest with you, because the Kumo future remained bearish, there was no way I was going to come out. There was no way I was going to come out unless I saw that the price was going to break through the upside, which obviously would have indicated to me that there was going to be a change of, there was going to be a reversal. And obviously, if it was to break out, I would have come out. It went in there. Guess what? By the time the price had come in here, I had no issues with it going in the cloud because I know they're thick enough to act as some resistance. Now, those of you who do not know much about the cloud, obviously I cannot, teach every single thing here. If you belong to my trading community, from time to time you will hear me come up with tips and ideas, trading ideas that would help you become a better trader and obviously help you, be more successful in using the Ichimoku system. Now, I don't mind the price going in there because I know it's big enough a cloud that could act as resistance enough to make it, bounce back out to the downside. And that's exactly what happened here. See, it almost broke out completely, but it didn't break out. Even if it had broken out, perhaps I would have come out of the trade or remained based on the price action I would have noticed. By this time anyway, I had made hundreds of pips. I had made hundreds of pips by this time. So losing 50 pips, losing 100 pips, or even 150 pips would not have been an issue. But then look at what happened here. I'm sure this was some news item. Whether it was the market makers or whatever just doing their thing, I don't know. But they pushed the price in my favor. I was excited. The trade still remained under the cloud. I carried on going. The price carried on going down. Isn't it amazing? There are times when you would see a change in the color of the cloud. But here, it just remained red or maroon. It remained bearish. Let me show you an example. I'll show you an example. Even as you can see here, let's just take it back a bit. Even as you can see here, the cloud is bearish here, even though it's small, but then it's bullish. It's bearish, bullish, bearish, bullish, and so forth. Not so with this trade. It was just one non-stop bearishness, if I could call it that, in the market. Anyway, I do not intend to keep this video for too long. So I'll be rounding up now. But look at exactly what I was saying. The price now broke out, to the upside. But guess what? Because the sentiment was still bearish, I stayed in. So we see here the price broke out and there was a massive pullback of about 140 pips or so. But I stayed in because by now I already had, perhaps well over 600 pips. Then obviously, the sentiment changed slightly through to the very end, even where we currently are now. And you can see, how I've been able to get over 1,000 pips on this trade alone. On this trade alone, I'm sure a lot of you can do it 1,000 pips any day. I would do it 1,000 pips more and more and more, until I leave this world. There are a whole lot of questions I'm sure, some of you might have. I would say feel free to join my trading community on Telegram. That's basically our social media platform of choice. We also have a Facebook group which is not as active as the Telegram group. Feel free, to join us there. Also to subscribe, to my videos, to get, video alerts or notifications, as it were, whenever I release more videos. I would encourage you to definitely, give us a like and a thumbs up, on our media platforms. Give us a like on this YouTube video, as well as introduce your friends, to join us. Introduce your friends. We want to grow this community. We want to be more people. Like I say, I do have, a lot of free tips I give and trading ideas I give for free, absolutely free. Even though I do also run a mentorship program, which I charge for. I do charge for my mentorship program, but obviously, those who are being mentored by me, you can expect, will be taken to a whole nother level, even as we do that. So feel free, to contact me, if you have the contact details, maybe by email or something on there. And like I said earlier on in the video, at the start of the video, the two indicators I'm giving away, I'm giving out, this time would be, the TK cross, which basically tells you, let me just do this. Let's go back here. As you can see, I also use fractals, in my trading, and those are a whole lot of strategies. I have been exposed to trading for over 10 years now, and I've been actively trading for 3 years. So you can imagine I use a lot of tools. I also, trade price action, obviously, using naked charts and all. But anyway, the indicator I'm going to be giving away, even as I mentioned, would be the TK cross. I'll be giving that away for free. So whenever there's a TK cross, you can actually, go for 10 pips, 15 pips and do some scalping, whether it crosses it to the downside or to the upside, even as in this case. This basically also tells you, gives you some information about the current trade. It tells you the future buyers and the current, buyers and, all whatnot. It gives you the information there. Let me just try and zoom in now and let you see exactly what I'm talking about. So you can see here, it gives you the information as to what's happening on this particular trade. It basically guides you. It's a powerful, powerful indicator. Anyway, so that's the indicator I'm giving away for free. And let's put this off. So that's the indicator I'm giving away for free. But the indicator, I am, actually offering for sale is the one that alerts you when there is a price break of the Kumo. When there's a price break. But obviously, if you belong to my trading community, you get some other indicators for free. But this is basically one I am charging for, the price break, which is all important, because it goes hand in hand with the Chiku span break. The Chiku span break is my most preferred alert, even when trading this, but that goes hand in hand with the price break. Anyway, feel free to contact me. I'm going to be leaving the details. If you're watching this on YouTube, I'll be leaving the link to join our Telegram group and our Facebook group, so that you can begin to enjoy these pips and profits with me and the rest of the guys. Okay now. God bless.